Thank you, everybody. If you don't mind, people in the back, keep your voices down or go upstairs a little bit. My name is Jacqueline Kwok. I go by JK. I'm the head of platform of DCG. Welcome to our panel. Confidential by design, how privacy protocols and chains are unlocking institutional use cases. So without further ado, let's ask the panelists to introduce themselves.
Hi, my name is Howard. I'm the founder of Aleo. We're a layer 1 blockchain using ZK to support private smart contracts and compliance.
Omar, Azhar, head of business development at Matter Labs, which is the company behind ZK Sync. At ZK Sync, we're building the bank stack of Ethereum, fully compliant, private, ZK-based blockchain infrastructure for large institutions and banks to start building on-chain.
Hi, I'm Dr. Benjamin Beckmann. I'm the Chief Technology Advisor at the Midnight Foundation. We are a layer 1 that allows you to introduce private information into a transaction without that information ever leaving your possession.
Hello, everyone. My name is Melvis, and I'm the Executive Director of Canton Foundation. Canton is a public permissionless blockchain purposely built for institutional finance. We uniquely combine configurable privacy, controls, and interoperability.
Hi, I'm Rob Shearer. I'm the Chief Commercial Officer of Paradex. Paradex is the first at-scale DEX to offer zero-fee trading for retail with privacy enabled. We're built on a ZK rollup.
Very cool. Thank you so much. So for you guys all build in the privacy space. That word gets thrown around a lot. And we all know that institutions care about privacy. So according to you guys, what is the institutional use case that's the hardest to solve?
I'll start with just saying that I think payments as a general category is really broken in crypto right now. If you just look down into even, say, payroll as one example of it, right now it's very difficult as people want to get paid in crypto to be able to do this in a privacy-preserving manner. And why this matters is that if you were to pay people, say, USDC on Ethereum, one of the main challenges is, of course, your wallet address leaks all of your information. So if your CFO is using that for payroll, your employees can just look at the wallet that paid them and then see how much their colleagues make, how much your boss makes. It's an HR nightmare. And that's something that existing blockchains, whether it be a Bitcoin or Ethereum, Solana, do not support. And this is where, right now, one of the things that we've been really trying to get out there is private stablecoins. And we announced at Token 2049, the world's first private stablecoins. Just this past few weeks, we announced with Circle and Paxos these new stablecoins that are available, that are privacy preserving, that allow you to support use cases like payroll, but more broadly speaking, the general payments use case.
I think it kind of boils down to single-party use cases versus multi-party use cases. So, for example, let's take tokenized deposits. Tokenized deposits, more or less, solved problem statement from a technology standpoint. The main hurdle essentially is figuring out integration with your core banking system, doing the reserves, integration with the existing systems. It's relatively easier to solve. But now when you take tokenized deposit and you make it into a multi-party problem statement where you have many different banks with individual tokenized deposits, and they want to be able to send payments or transact with each other. Obviously, you'll probably also need to incorporate stablecoins into that mix. Then it becomes a much harder problem statement because now you have the same problem that we've always had in blockchain, crypto, or any new technology, which is the coordination problem between many institutions together to actually build a combined use case. So it really comes down to, so tokenized deposit, back to it, single party use case where I'm a bank, I want to build 24/7 money on chain, through across all my global subsidiaries, done. But now if I want to do that and interact with my counterparty banks who also have tokenized deposit, then you have a coordination problem statement, and that starts to become much, much harder.
I would like to move away from a specific use case. Our thesis is adoption is stuck because of the lack of privacy. So most of the economy, most of the transactions are point-to-point. They're hidden, right? Like 99% of the transactions that you see in the economy today have this particular feature. So you need to enable adoption. You need to enable these types of transactions to be empowered and enabled on chain, and then you get lots of use cases. So if you're able to both present a system that can be trustworthy or trustless, really, and you're able to incorporate privacy into it, then you can bring these types of transactions on chain that simply can't be there because of transparency. So I think you'll hear that from all of us, but I don't think it's a specific use case. It's just basically a missing feature.
Yeah, I agree with everything that everyone's said so far. At the end of the day, for institutions, enabling privacy on a need-to-know basis is something that is key and important for them to be able to issue similar types of securities or assets, but then be able to abide by the same regulatory environment requirements that they have, client confidentiality, and then eventually, in the competitive world, being able to have their own proprietary data, information, and workflows protected as well. So within this, unlocking privacy to allow for payments, collateral mobility, and then broadly issuing of real world assets is very key, and those are some of the core use cases that we're working on.
Yeah, I think from our perspectives in the trading world, it's really about how do we, particularly built on an L2, how do we make the entire chain of, pre-trade, trade, post-trade, and ultimately what positions you have live, how do we make that private while minimizing the trust assumptions you have against us as the exchange? We have a very similar view that DEXs will not be able to scale beyond, much further beyond where they are today without enabling privacy. Nobody wants to leak alpha. Nobody in TradFi wants to have all their positions or their trading strategies revealed. So it'll be a key for us scaling to the next level.
Can I ask a curveball, weird question? So, with people who say that privacy is a feature, not a product, what is your retort to that?
I mean, first off, I would say that you can't bolt privacy on. And if you look at Ethereum and Solana, depends how spicy of a take you want from me. But
The spiciest.
I would say Ethereum and Solana have a horrendous solution to privacy. Vitalik proposed this thing called Kohaku. The idea is to offer ephemeral addresses and ephemeral accounts. It's a UI UX nightmare in my opinion, and it's also a horrible way of adding privacy on because it still does not address the fundamental issue where gas in your system links you. And that is one of the key issues, even when you look at systems like Tornado Cash that were on Ethereum, where it was very clear that they could not support full privacy because of the fact that the transactions on there could be linked via your gas.
That is a spicy take. Who else wants to follow that?
I would say privacy is a product right now only because we don't have end-to-end business solutions that are private. So once we have that, then privacies are just a required feature. I mean, privacy is a mandatory capability that you have to have. But in my opinion, it will very soon just become another feature list that is just a requirement.
Just to slightly come down the other side on that, I don't think privacy is a product at all. I'm not going to sell you privacy. Like, name one product that applies to. It's a requirement, plain and simple. If you can't support it, you can't bring in certain types of use cases. That's it, full stop. It's not a product that I'm going to sell you. It's an enhancement to a product that may already exist, or it can bring a new type of asset or a new type of feature into the market.
End of the day, privacy is a core fundamental tenet for any institution coming onto blockchains and just for the general businesses. So for us, since 2014, when the digital asset team that built Canton started, they started with a core premise of trying to build a blockchain solution that has privacy from the fundamental level. And yeah, it's very critical and important. And it's just that in terms of the growth of the crypto and blockchain world, where many of the existing large chains start as a public, permissionless, everything transparent. From there, most people launch applications and chains with everything fully publicly transparent. And then now some are trying to bolt on privacy features, but it has to start from the ground level.
Yeah, I don't have a super spicy take. It's core to what we're building.
Okay. Thank you for the spicy takes. I really appreciate it. Makes people listen more. Okay, so maybe starting with Dr. Beckmann, what has changed in regulation, market structure, or even cryptography technology itself that makes privacy-preserving infrastructure practical for institutions today?
So we've started seeing adoption by these types of institutions, and we know that there are regulations or other business practices that they need to follow. And so there is both the market moving in this particular direction, and then the technology. I kind of would equate it to where the cloud was back in maybe 2010, where you have big institutions that are looking at it. There's an advantage, but they have a resistance. I know we're starting to see financial organizations step into this, but they're not going whole hog into it yet. But it turns out that the technology is starting to be fielded in large organizations. They're starting to be able to feel it, touch it, play with it to actually see that it's real. And just the advancement of that technology is allowing the adoption.
I would add on that I think one of the key things that was missing from privacy features in years past was the lack of compliance engines and compliance solutions in privacy tech. So when you look at, for example, things like Tornado Cash, the key element to it was that there was no way to verify and to have certainty that the actors in the system were honest and good actors. And this is something that has changed over the last few years. You know, when I talk about any new technology like ZK, one of the main things I call out is that any new technology has good actors and bad actors. If you look at the early internet, you can see the same thing happen with Napster and with Spotify. Both were pieces of software that let you download music. One said, hey, let's use this technology, this internet, to go circumvent all of the artists, all the music labels, and let you listen to music for free. And the other said, let's go and plug in with all of the music labels and all the artists, charge a nominal fee. And I think it's very clear which version ended up generating billions of dollars of value for artists worldwide. And I think it's the same thing that's happening with ZK here right now, is that there are technologies like Tornado Cash that are literally trying to circumvent the system. And then there are technologies, including those from many of my peers here, where we are trying to build compliant privacy-preserving solutions that have compliance at its core. And what that means is that you can actually prove every time you're transacting in zero knowledge that I am not a part of a freeze list, that I'm not a part of a sanction list, that I am an honest actor, that I am participating, with, for example, that I'm over the age of 18 or that I'm under the travel rule. These are all properties that can now be proven without revealing your PII, your information on-chain openly. You can keep that information private and to yourself, and this opens the doors to new types of policy engines, new types of rules engines, and that ultimately actually creates safety in the privacy landscape that we're operating in.
Agree with a lot of what you said there, but I would say if you're watching the markets and a lot of the PR news quite a bit, I think one of the big interesting things is now, historically, if you're a protocol and you do a big proof of concept with a big name, you would notice a big market shift in your token price. Today, no one cares. You will not see any market shift whatsoever in your token price if you do a proof of concept. And that, I think, is a good sign of the maturity of the industry. People now actually want to see, okay, proof of concept, great, but are you moving into production? And the couple key factors behind that, obviously, there is the Genius Act, so providing a lot of clarity on stablecoins, tokenized deposits. So you're seeing a lot of aggressive movement there. And then on the technology side, it's obviously ZK technology. We're building with ZK as well. It's obviously 10xing in terms of efficiency, in terms of security, in terms of developer experience every single year. So the overhead cost of taking on a proof of concept has significantly gone down, which then allows you to then start moving more into production-like systems.
All right. Okay, let's switch gears to talk about asset tokenization a little bit. You all touched upon it briefly in your introduction. So let's assume that all kinds of assets can be tokenized. What privacy capabilities matter the most? Maybe we'll start with Rob.
Yeah, I think for us, the thing traders care about the most is, one, during execution, are they leaking any information, right? Trading firms are notoriously paranoid. They want to disclose as little as they can in traditional markets. There's always been some trust assumption that you trust your prime broker, that they're not going to steal your strategy. But in general, they don't want to reveal anything pre-trade or at the time of the trade. So figuring out a right way to have privacy at that layer. And then the second layer, and you've seen this play out on Hyperliquid, is, especially in leveraged positions, where is my liquidation point? So what positions do I have currently live in the market? That is the second super important thing, and we've seen, many, coordinated hunting efforts for positions that people can see on chain. So I think those two layers are the most important from a trading context.
I'll add that I think from a tokenized asset standpoint, one of the main challenges is that we still think about privacy as a very binary option of black or white, when we're in an ecosystem where we're advertising programmable money. And so what I mean by that is that every transaction with a token has a sender, a receiver, an amount, and an asset type, and different types of applications or use cases require different parts of that metadata to be private. To give you a classic example, let's say you wanted to have a Patreon account where you take crypto and you want to allow for donations. Well, some people, they want to donate, but they don't want to reveal who they are, in which case they want to make the sender private, but obviously the recipient and potentially the amount public. Other times people want to say, hey, I donated to this cause, but I don't want to reveal how much I donated. Maybe it was $5, maybe it was $10 billion, I don't know. But they want to have the amount be private, but they want to reveal their sender so that people know that this identity was the one that actually made the donation. And we haven't reached that level of conversation in the privacy space yet to have real refinement. So what I mean is that these token contracts that are being deployed on chain today literally just say everything is public. Now we're starting to have private smart contracts where we're starting to find, hey, we want to transfer things publicly or privately, but actually this is a spectrum. There is a full spectrum to these assets that has not been covered yet, that hasn't been tapped into yet. And I think that opens a broad spectrum of use cases that we'll see further in years to come.
I was going to ask a follow-up question. So assuming you guys are talking to a bunch of banks, your banking counterpart, say Bank of America, and you explain all of this, what do they ask you? Like, what do they care about the most?
So at the end of the day, when we're talking to the large financial institutions such as the banks, it's being able to discuss the core principles or aspects of tokenization that they want without getting too granular around like crypto native speak. In the sense that, for example, within crypto, we talk about staking. That is equivalent to being in the securities market, securities financing. You talk about looping, that is doing leverage. And then you talk about yield farming, that is basically compounding interest and the likes. So it's making sure that the descriptions and discussions around what you're doing fits the language that they're talking about. And beyond this, around securities tokenization and RWA tokenization and the likes, it's being able to discuss the core workflows that they need and adding the components around blockchain that enable the composability aspects of why we're here. In the sense that the core value of blockchains is the interoperability, composability, and then programmability. Because at the end of the day, by enabling all these things, we're able to unlock 24/7 markets, instant settlements, and then on top of that, the ability to compose transactions across different applications as well. And within that, because privacy is very important, and I can't remember what's your name. Yeah, as Howard mentioned,
Nice to meet you.
Yeah, being able to break down the different workflows to build in the privacy features is very critical, because at the end of the day, a transaction isn't very binary between the sender and the receiver, but then there are other components around what institutions need, like some parts of the transaction need to be disclosed to the regulator, the auditors, the accounting, and the tax teams within these institutions. So having the blockchain smart contracts to be able to build these components within the full workflow and life cycle of the transaction is very critical.
Just to add to that, I think it's all about the business model. If you can't understand the business model and articulate where the value is, then you're just selling some technology to somebody who's interested in a hobby. So the interactions that we have with counterparts like what you're mentioning is they're generally interested in a particular capability, like for example tokenized deposits, where they have regulations about certain things need to be secret. But then there's the business model behind it, that if you can't understand and support that business model, then you're not really a value-added partner to them. You're just a supplier of some tech, and you might as well be in the IT department. So you got to be able to be out there and articulate what the value is to them, and then the technology is way behind that. It has nothing to do with the actual conversation.
Yeah, I would say, so assume, these gentlemen have talked about the business value propositions, those are all valid. The banks generally ask the most intense security questions. No crypto team ever asked me, like, all right, I want to understand how your verifier works. Like, I want to understand how interoperability works at the very core technical level. And so I would say for them, security of the protocol they're building on is incredibly paramount, because they are going to dig into all the different ways that someone could actually hack it or create an invalid transaction. So that's my one addition to, on top of what these two said.
Yeah, I would double down on what Omar said, which is that, from my experience talking to banks, they're actually surprisingly caught up on everything that's going on in the open source decentralized space that crypto is. And I think one of the main concerns that has been flagged time and time again, at least in my conversations, is the lack of guardrails in these systems. That everything is kind of fully out there, that it's just open, that you can see everything, that there's no take backs, there's very little understanding of what they can and cannot control today, because the systems that were provided from literally a decade ago were meant to be just transparent, like fully public blockchains that offer no concept of confidentiality, no concept of information asymmetry, and no concept of compliance. And I think that that is something that's starting to change, certainly with the tech that we're all building here from these projects on stage. That's certainly something that I have seen firsthand, where they're asking a lot of these granular questions about understanding, what exactly can I do to ensure that parties that are in the system are actually honest behaving actors without having them leak all of their information? What are the guarantees that I can get from a metadata standpoint so that from one party to the other party, from one bank to another bank, that both sides see the same metadata check marks, but maybe they don't have to openly share this information across the network? And there's a lot of these examples that I've found where it's really about understanding the guardrails, because these guardrails simply have never existed in crypto stacks before.
Actually, I've got so a good example is there's an FX engine that's getting built as a layer 2 using our Provable technology. Banks are their customers. They've gone through the due diligence on the technology itself, and they're comfortable with it. Now the main question is, okay, how do I prevent myself from going rogue? Because that is now being the question that's being asked. And I think that's also an area where ZK actually kind of shines quite a bit. So even questions not just on the technology, but also rogue actors, or what is the trust assumption on the different protocols and the different actors within it as well.
And one other key component and topic that we discussed with some of the banks in the Canton ecosystem has been, because we're tokenizing real world assets and most of them are heavily regulated securities, a key discussion always revolves around how do they perfect the title of the underlying asset coming on chain. In the sense that the main thing that happens is that within crypto, many people talk about tokenization all the time, but not all tokenization is the same. In the sense that at the end of the day, tokenizing an asset, and that asset being an SPV somewhere in the BVI or Cayman, and when insolvency happens, like, do you really own that underlying asset? So they really try to understand, how can I bring that asset on chain and have the full rights and obligations as a native asset, so that when it comes down to bankruptcy, after the secured debt, unsecured debt, preferred stock, uncommon stock, and the tokens part comes in place, where do I stand within the whole stack? So trying to understand how they can tokenize the asset, but then have the ownership of those assets fully without being an IOU is another component that we've had discussions around, how they can bring that on chain, but then bring the full rights and obligations on there. And I think 3 to 4 weeks ago, I believe it was the SEC that started ranking the different types of tokenization that are in the market, in the sense that there are the highest level was tokenization that is done by a CSD, like the DTCC or Euroclear. And then afterwards is with tokenization platforms like Securities or Superstate, who work directly with the issuer to bring the asset on chain. And then third is the likes of like X stocks, which is basically a fund that's giving you a share of, that's giving you an IOU of the underlying asset, and you don't necessarily own you don't get the dividends or the voting rights of those assets.
So you're kind of answering the question that I want to ask next, which is, if I were an asset manager and I have a product that I want to tokenize because my boss told me to, what is the minimum viable stack? So Melvis, is that the minimum viable stack that you would recommend?
Yeah, so at the end of the day, it comes down to like the distribution channels and who you're actually selling this to. Because if that tokenized asset is going to be sold to some of the largest asset managers in the U.S., such as a Wellington, a BlackRock, Fidelity, and the likes, they want to own the true underlying asset. They're not just looking for a representation or a CFD or swap of that asset. So if it's for those types of partners, it would be using a platform like, for us at Canton, we work directly with the DTCC to natively issue treasuries, and eventually you go down the stack to equities as well. But when you buy those assets, you're owning the full rights, obligations, and claims to those assets. But to go back to your question, if it's tokenizing assets for maybe users in an emerging market country or someone who can't get access to a U.S. equity or U.S. stock, then potentially the the digital twin works or the wrapper works, and they may be able to take ownership of that and be fine with it. But at the end of the day, it depends on the underlying distribution or user base that the asset is being tokenized for.
I would add that if confidentiality and privacy are a key property that the partner requires, then you need to build a full vertical stack to support the actual use cases that they're asking for. And the reason for that is that we're building protocols here. There's also the networking stack. There's also the application stack on top. And your privacy is only as good as your weakest link. If on any one of these parts of the stack something gives, then you basically are leaking alpha or you're leaking information that otherwise should not be public information. And this is where, even for us, we've really focused on the entire vertical integration. Just yesterday morning, we announced a brand new wallet called Shield. It is a privacy-first wallet where we've partnered with Circle, with Paxos, with Hyperlane, with a bunch of industry partners to build fully end-to-end privacy-preserving experiences to make sure that from the protocol to the networking to the application stack, you can have things like USDCX, things like USAD, where the transactions themselves are end-to-end encrypted. They are fully private. There's no compromise in that user journey. And I think that for a lot of these use cases, as you add new tokens, you actually have to think about that entire vertical stack from bottom to up.
I'm assuming this asset manager already done their first line of due diligence by asking AI on what the stack is. So I won't necessarily go to like the custody solutions, the wallet solutions, the indexer, et cetera. I will point out though that none of hardly any of the existing infrastructure providers, all of them have built their infrastructure, whether it's custody solutions, wallets, based on the premise that you're building on a public blockchain. They haven't necessarily modified what they've built for the private blockchain stacks, and that is still a work of order that needs to get done. But on top of that, the bigger hurdle, I would say, is really the integration with existing systems and the workflows that are required. So your accounting system, your finance system, your risk compliance systems do not understand how to deal with on-chain data. So when you are picking your vendor stack, you need to make sure who is your strategic partner that is actually going to help you solve the actual integrations with your end flows, as well as your customer workflows that are required. And the majority of that is going to be custom work, and that is probably where majority of your costs are also going to come from.
So I think the minimum viable stack is to make sure you're on the vendor list of the partners that you're working with.
The most practical answer out there. Also, the AI one was pretty practical too. Okay. Good time? Okay. Well, we're wrapping up here. How can people get involved with what you're building?
Well, I'll certainly jump in and say, with this new wallet, Shield, check out shield.app. If you want to learn more about Aleo, go to aleo.org. We're also available on Discord. You can find the community on there. And also, I'm on Twitter. You can find me as well at #1 Howard Wu.
Definitely reach out if you are looking for your on-chain strategy and thinking of how to actually build it on top, particularly if you're interested in building on top of Ethereum with privacy. You can find me on LinkedIn, Omar Azhar. You can also find a number of interesting on-chain solutions, whether it's tokenized deposits, trade settlement, et cetera, on zkSync.io.
So our strategy is very much kind of an open kimono, get the technology out, get it open sourced, get people to use it. So we have partners of like the Open Zeppelin brand to be able to build smart contracts on top that you can lift in place. We have partners in the custodial space of things like BitGo, Copper, Zodia to enable other institutions to be able to use our technology. So you can interact with those partners and many others to get interested or get somewhat familiar with Midnight. And then you can also come join our communities. We are open Discord communities that we interact with. And then in the room today, there's 4 or 5 of us that are definitely happy to answer any questions you may have.
Across Canton, we work with some of the largest financial institutions, such as Goldman Sachs, HSBC, SBI, all the way to the financial markets infrastructures like NASDAQ, DTCC, TradeWeb, and the likes. And the beauty about our chain is that it's publicly permissionless, and so you're able to also build DeFi applications. So we have people building swaps, perps, prediction markets, all the way to vaults and also what is it called? All the way to vaults. But then the beauty is that we're launching a Canton Development Fund this week as well. So across institutions to DeFi entrepreneurs, we're here to help support the build of applications with configurable privacy, controls, and interoperability. And you can reach me on LinkedIn, X, Telegram, and I'll be upstairs with a Canton cap on as well. Thanks.
Yeah, just go to paradex.trade. You can access the platform directly. You can also just find me, pull me aside at any time this week.
All right, thank you, everybody. That's our time.
Thank you.